What up, party people? What's up, my MC family, my retail family, my Sheba Army family, right? Lucid family, all right? If you're a retail investor, hope you're having a great day. I hope everything is sensational, like Future says, right? So welcome back to the channel, guys. It's your boy D. We're gonna remind you, I'm not a financial advisor. It's not a financial advisor. Don't take it as that, right? Just take it for. Oh, forgot to pause that. But welcome back, guys. Okay, we got some things to go over today. I'm gonna jump into it kind of quick right here because there is a lot of information. But I just want to remind you that even the big money, the big dogs, they don't always win, right? They're not always right when it comes to the stock market. Doesn't matter who you are, you win some, you lose some, right? So that's what I wanted to, the messages today, like just know that not nobody wins all the time, okay? And like today was a rough day in the market. Oh well. But you only lose when you sell out of a position, right? If you're down, if you're negative, you only lose when you sell. So I'm still holding my positions, right? Even though the market is kind of choppy and it's kind of, you know, bleeding out like this past week. And if you know what happened with Netflix, sorry, then you know that that's also what kind of brought a lot of the tech sector down and so on. So let's get into it. Welcome to the new subscribers. Thank you for joining, right? Thank you for subscribing. I really appreciate it as the channel grows. We also just passed 20,000 views on the channel, right, guys? So thank you to all y'all because it's only possible with all y'all, right? And that's why I keep coming back because, I enjoy coming back and doing this show for you, this providing some information and hopefully some education on the way, right? While we wait for the AMC squeeze. Yeah, or if I just entertain you, or educate you, thank you for joining. But yeah, let's jump into it. All right, guys. Let's get it. Okay, let's like I was saying, I was watching BBBY. There was some news with Ryan Cohen that came out, which made the stock run. I don't know the full details, but that's the only one that I really know that kind of got a nice push. It was up 6.8.5%, but on my watch list, guys, and I watch a lot of stocks, there was a lot of red today, right? And this is just after hours, so there's some green, but pretty much, 80% of the stocks that I was watching here, 90% of them were red. And the SPY also was just doing horrible. We can go ahead and look at it real quick here. But yeah, the SPY did not look good at all. Okay, this is the 2-minute chart, just a complete red day for, see from here, this is the 2-minute all the way down, right? So not good, pretty choppy waters, right? If you ask me. But yeah, like I was saying, at least you're not this guy. Sheesh, this one hurts even me, and I don't have this kind of money either, right? But his name is Bill Ackman. He gives up on Netflix, right? Taking 400 million loss as shares tumble. That's because on the earnings report they were talking about how they lost subscribers. They're going to be, projected to lose more, and it's crazy, right? That kind of loss, but I feel for him. But there was signs before this, right? Because Netflix was like at $700 back in November when this all, the market started to go down mid-November. Then it went down to like 500, 400. And when the latest earnings that came out, it went from, in a matter of like 15, 30 minutes, guys. I mean, it went from like 360, I think, down to 220 or something like that. Like that fast, right? So a lot of losses there, unless you had puts, right? If you were shorting it, if you had puts, man, I mean, they made some profits there for sure. So today we're gonna get into some things like I want to point out first off, the days to cover is going up because the volume is dry, right? On AMC, and like the volume has been ridiculously low. I think today was only like 24 million. I can double check that real quick. But yeah, it was super low. 26 million right now, current volume, right? That's nothing compared to a couple weeks ago. We saw over 200 million. Okay, so that's that. The AMC Ortix data. So it's funny, this hasn't changed in I think a little over 2 months. 100% utilization. Days to cover is going up, right? It's almost at 4 days, which means that's how long it would take all of the shorts to cover, right? If they were to cover all 100 million shares at once, it would take them up to 4 days, right? Because of the current volume to cover those positions, right? So that means the squeeze, if it was the squeeze in the MOAS and all that, it would last at least 3 or 4 days, right? But you're not even accounting for FOMO and whatever would be in the options chain and so on, right? So shares on loan, 128 million. And then, what I really want to jump into right now is going to be the FTDs, right? So Let's go over to on stocks era, FTDs here, right? So we have a big day coming up on the 27th, right? So today's the 22nd. So we'll see if they deliver these, right? Because it just so happens that on the 23rd, March 23rd, right, there was 1.3 million FTDs, right? That's why this is red, and it was worth $24 million. Okay, so just to point some of that data out, we only have the information until the 31st. It's always like 2 weeks late, but yeah, it crossed a million. Excuse me. So let's jump into, like I said, I always want to, educate people. And let's talk about an FTD again, right? So a failure to deliver is when one party of a financial transaction does not follow through on their end with the deal. Even experienced investors can have this happen to them. So how does a failure to deliver even happen? How does it affect you as an investor? Learn exactly what a failure to deliver is and how it works and what it means to you as a retail investor, right? So failure to deliver is the phrase by using in the investment community when one party of a transaction doesn't follow through with their side of an investment, contract, or transaction. Generally, it happens when shares or funds aren't delivered to the buyer or the seller on the settlement date. Naked short sales and selling an asset without borrowing it first are two of the leading causes for failure to deliver. In this case of naked short sales, a failure to deliver can have a compounding effect, right? So imagine that you arranged to purchase an asset on April 26th and take delivery on April 27th, and then contracted it to sell it to another investor on April 27th at a higher price than what you paid for. On April 26th, you pay the asset, but on the 27th, the other party did not deliver it. What makes it compound is that the investor you were going to sell did the same thing you did. At that one that they did the same thing you did, and the one they were selling it was also going to use it in a naked short sale, right? So this is what GME and AMC we always talk about, right? Is the naked short selling and how they're able to manipulate the price. And it even gives a GameStop example. On January 28th, 2021, more than 1 million GameStop shares with an average price of $347.51 failed to deliver. GameStop share price had risen from $20 per share 2 weeks earlier as retail investors from Reddit and other websites bought into the stock. According to the SEC, many investors blame the failures to deliver on naked short selling, right? So like there's a problem because it has to do with the share and the cash, right? So where's the notes? Okay, down here. Failure to deliver often happens due to errors of processing delays. In these instances, the delivery is expected to settle in the next few days and is removed from the SEC failure list. The party that failed to deliver might be fined for the failure. The Financial Regulatory Authority, FINRA, is the entity that works to prosecute failures to deliver under regulation, SHO, right? So if they're the ones in charge, why is this still happening with AMC a year later, right? If it happened a bunch, we can go, let's see, probably way back, happened a bunch in June, right? And then again, we're back, we're getting, the numbers are creeping up again. So you might see in this is a failure to deliver among investors transactions of any kind. The most well-known causes are short sales. However, the SEC notes that a failure to deliver can also happen on a long sale. Yeah, sure. That's if there's issues with the cash, right? But I'm pretty sure we're putting our money, and then we're, how the market structure is. They're the ones that are, in my opinion, causing the FTDs. All right, let's go down here. For the most part, individual investors aren't affected by failures to deliver. Individuals can't perform naked short selling because the SEC regulations require brokers to locate shares before individual transactions. It's possible you could be on the other end of the naked short if the buyer who isn't delivered shares, but in most cases you'll be made whole in a few days. If you're worried about naked short selling or being delivered phantom shares that don't exist from a naked short seller, most brokers will offer to send you a physical share certificate for a fee. And I think there was a note here that I needed to read. Yeah, here we go. So just pay attention to this part, right? It's pretty interesting. Short sales and naked short sales are not illegal. The SEC says that in some circumstances, they help bring liquidity to the market. All right. So I want to go over some of that information because to me, it's just, funny that we're supposed to be at 100% utilization, but then there's 1 point, 1.3 million fails to deliver, right? That's how, where are those shares coming from? But if this keeps going up, keeps making it harder for the shorts to get out of their position, right? So yeah, and just some other news with AMC is that they upgraded digital projectors to laser projectors across 3,500 of its auditoriums nationwide by 2026, and the theater chain's first major upgrade of its equipment since the company converted to digital. And the theater chain says the new installations will bring a value of roughly $250 million, right? So they're just bringing value. That means that like they're reinvesting in their own business, right? Which is, that's a good thing, because they're not just throwing money away. I mean, they're reinvesting money into the business. And then for shorts, guys, like if you ever want to go to Fintel, you go to short interest, what is it? Or owners, short interest, right? And remember, we're not just fighting one big hedge fund or one, major devil. It's a lot of little D's too, like this Chicago bought puts, Chicago LLC, whatever, right? These are all the most recent short positions. And you still have Susquehanna, 12.6 million puts. I want to know when those expire, because they have been on there for a while now. Short, 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 short. See all these little D's? Short, short, short. So remember, and like JP Morgan's in here, that's who we're fighting, right? The retail people are fighting the 1%, the big money, right? But they don't always get it right. Remember that. Like I proved to you here, taking 400 million losses, shares tumble. Didn't see the signs, didn't sell, when he needed to, and lost big time. Here's the AMC chart. I'm just going to adjust one thing here, because I think it's going to take longer, and I think we might come back down to test this. But there's some catalysts coming up, so that's why I believe it can happen like this. And it's also, based on this breakout here of when it came back down, which now I think I have confirmation that we are actually in this piece right here, right? So you came up, we had the run, got rejected, and then once it breaks out of the triangle, because it came to the very end of it, right? Same thing here over here. This is what I'm paying attention to, is when you had this run up, came back down, needs to come to the end, and then we break out. All right, that's just, in my opinion, what I think is gonna happen. Also, because usually, Tuesdays, Wednesdays are green for AMC, and we're coming to the end of this cycle on the MACD, right, where you are going to get the crossback to, hopefully, right, the bullish side, because we already had a sell cycle here. Also, the RSI is coming down, which when it's under 50, it means that it's oversold. And then if it goes above 50 and above here, it's overbought, right? It's like kind of how that indicator works. But yeah, I like the setup. I still think that we just need to see volume, because we haven't seen this low of volume since back here, which was, let me scroll back up here. Okay, there it is. All right, so we're looking at like 20 some million volume, right? Let's see, the volume here was 19 million for the day, right before the breakdown, right? But then it was the same over here, like with 15 million volume, 19, I think 15, 38 million. It started to pick up 37, 38, 53 million, right? So when we broke out, we had about 53 million one day, next day 294 million volume. Okay, so that's what I'm looking for next week, is like to see, or in the next few, maybe 2 weeks, look at the volume. Hopefully, it'll start to pick up and we will get that break, and then we get going. All right, but it does have to do with the volume. All right, I'm also going to talk about, I already showed you guys all that. I'm talking about Lucid here real quick. It's been in a nasty downtrend now for months, I would say, right? Even when Tesla got, put out that good earnings and it went kind of crazy, it helped Lucid a little bit, but not as much as I expected it to. And we're still in a red super trend, right? We can't even come up to the EMAs. So I do expect more pain to come down. I'm still holding my shares, guys. Like I said, I'm going to accumulate shares as much as I can, right? Because this is the downtrend. Once everything starts coming back, it might take a few months or a year, or so. But when things start coming back, I'll have my shares locked and loaded to make that run to the upside. Because this is most likely going to, you know, do one of these, like where like a cup. But it's just gonna take time. All right. I'm not saying it's gonna happen next week, you know, nothing crazy. I haven't seen any crazy catalysts, you know, recently. So we just gotta wait, and I'm just in buy mode for, you know, what's called buy the dip, because I still think it's a baby company. You know, not much has changed in my eyes for Lucid, and I still continue to see their growth here around me. But yeah, the volume is pretty low, 23 million, 13 million, and it's just, you know, this is the daily chart until we get a bounce. So I could see it even coming down to 17, right, to bounce off. This is a good support line. So that's just where I expect. And then the super trend too, it needs to complete the cycle until we start getting some buying power to bring it back, right? So that's what the chart is looking like. And I'm not gonna spend too much time here. Like I said, I'm kind of bearish in the short term right now, so I could see it coming down. So we'll see right here. Maybe I'll pick up some shares here, right, when it's a little bit cheaper. But there is this article that I just want to go over. It's pretty long, so I'm not gonna go over the whole thing. But the summary is, Lucid Motors has a huge opportunity to grow production in Saudi Arabia. The production and sales opportunity could be worth 15 billion. I discussed my estimates for 2Q pre-orders as Lucid Motors expected order book value, right? And they did announce that they're gonna start, you know, producing the cheaper version of the Lucid Air, so that way, you know, they start to get a few more, you know, or more income, more sales revenue coming through the door. But yeah, we already knew they're gonna, you know, they're planning a new manufacturing plant in Saudi Arabia. But you know what this will do is it will allow them to enter new and promising markets, and also diversify into manufacturing. Its manufacturing footprint. So just, you know, I already went over the chart with you guys right now. And it didn't really hold the $20 mark. I believe it's at what, 1911, right? So it already broke under that. But yeah, here Lucid Motors anticipates producing up to 150,000 electric vehicles per year at the King Abadu Economic City facility in Saudi Arabia. Lucid Motors expansion strategy differs from that of the other EV manufacturers, which is likely due to the company's production of high-end luxury electric vehicles, which are likely to find buyers in the cash-rich kingdom, right? So yeah, that's actually a big jump, because right now I think they have like 20 to 25,000 pre-orders or something like that, right, that they're trying to complete. So yeah, another factory would help them, you know, produce more cars. So yeah, just a lot of numbers, a lot of data. It's a pretty good article. I'm gonna put the link down in the description, right? But the conclusion is Lucid Motors has $1 billion sales opportunity in Saudi Arabia, but the stock does not reflect this currently, right? Because of what's going on in the overall market with the Fed and the banks and the interest rates, all that, right? The EV company's expansion strategy differs from that of the other EV manufacturers, who tend to prioritize markets with already high levels of electric vehicle adoption, Europe and China. All right, so that's where Lucid is different right now, right? They're trying to go to Saudi Arabia, while most other electric car companies are trying to go to Europe and China. All right, so yeah, guys, a lot of information, but I just wanted to check in with y'all, you know, tell y'all what's up, and I hope you enjoy your weekend. It's only a 2-day weekend, right, this time. So let's switch back and wrap this up. So yeah, guys, thanks for coming by today. Like I said, I hope you have a great weekend, you know, do something fun for yourself, enjoy your time. And I hope to catch you in, you know, next week's videos. We got a lot, you know, we have a lot to look forward to. I think we're sitting good with AMC. I know the price, you know, keeps going down, but it's not really much, guys. It went down for like how bad the market did today. It went down, you know, 1.96%. You know, right now, not too bad with the way that we're sitting, right? The shorts, their positions are going to get more expensive as the interest rates go up and so on. And so we'll touch on that later. And yeah, I'll catch you guys in next week's videos. All right. See you.